Another day, another IPO, crypto exchange Gemini Space Station joining in on a slew of companies going public today, but it's not just today. It's been a busy week with IPOs with companies such as Figure Technology and Klarna also making their public debuts earlier in the week. For a closer look on the action, let's get to Yahoo Finance's Jared Blikre. Jared.
Thank you, Josh. A whole slew here. This is what's happened this week, and I'm not even including the pre-SPACs, those public acquisition companies that are trying to go public here. Here's Gemini. It's up 17%, and that is a pop from the IPO price, and I'm going to dig into that in a second. But at first, I just wanted to go through the list here. This is how much money has been raised by each of these IPOs. Klarna, by far and away, that is the biggest at $1.37 billion raised. That's not the size of the company. That's how much money they raised at their IPO. Then you have Zenta, very small, $6 million. That's a fintech, very similar to Klarna in that it is fintech. And then you have Figure, that's blockchain plus fintech. They raised $787 million or thereabouts. LB Pharmaceuticals, as you might guess, that is a pharmaceutical play in the biotech space. And then we got BlackRock Coffee Bar. That is a pure consumer discretionary play. That's retail, raised $425 million. And then $294 to Gemini. That's a crypto and a little bit more fintech there. And then finally, Via Transportation. I guess I would call that transportation tech, and they raised almost $500 million right there, $492.9 million. And if you take a look at the opening day pops here, and I do have a little bit of issue with some of this and the reason that this has become the benchmark, but then this is in fact one of the benchmarks that Wall Street uses to gauge how hot the IPO was. So you take the IPO price, which is set the night before the stock actually begins trading. That's where all the insiders get into the stock. And then you measure the opening price the next day. And usually that's sometime between 11 a.m. and 1 p.m., sometimes even a little bit later. You're going to notice there's kind of a sweet spot here right around 30%. And so a lot of these pops kind of settle in that area. You got Klarna at 30 exactly, BlackRock Coffee Bar, Gemini Space, a little bit north of that. Figure was a big standout yesterday of 44%. And then Via Transportation opened a little bit under its IPO price, though I should say it's trading above it right now. And that's really what I'm talking about here, is that it matters where you close the day from the relative to the open, because most people are not going to get at that insider's price, which is the IPO price. They're going to get at sometime either on the open or after that, and then they're going to make that money into the close, or they're going to lose money into the close. So next week we'll be able to kind of filter out and see which one of these was actually profitable for investors. But in the meantime, I just wanted to show you a chart here of US IPO deal value by quarter. This goes back a whole decade, and so you'll see this huge peak in the middle. I showed this yesterday. That's 2021. That's the era of free money when we had all that fiscal and monetary stimulus. And you're going to see there was a huge crash. We had a bear market in 2022. Fed was aggressively raising rates. Cost of money went way up. And so we crashed. But now we've just been kind of stair-stepping higher. And we are kind of almost back to the pre-IPO era. And things have definitely heated up here, and it's catching a lot of eyebrows. But I would issue this little word of caution. Before you jump into a new IPO, consider this stat. 90% of all IPOs undercut their first day of trading price within the first year. And so you usually get a pretty good opportunity to get into these IPOs at lower prices than you see in those opening days. Now I'll send it back to you on that.
All right, thank you, Jared. Join me now from the floor of the New York Stock Exchange. We've got Sebastian Siemiatkowski, Klarna CEO. Sebastian, it is great to see you. Congrats, Sebastian, on the big day. Walk us through, Sebastian, what this day means for you, Sebastian, for the company, and why go public now? What were the variables, the factors in that decision?
Look, it's been obviously, due to the very troubling news just recently on Charlie Kirk, I'm a little bit not in the celebratory spirit I was previously, but it's been obviously a fantastic day. I'm very happy to see that, we came here and for our employees and for the long believers that have been investors in the company for 2 decades, seems to be what was a very successful day with good trade and well-receptive market has received us very well. So we're very happy.
Charlie, Sebastian, I want to acknowledge also, to your point, Charlie Kirk, and obviously our thoughts and prayers are with him and his family at this time. For you, Sebastian, you think about this market opportunity, I'm curious how you think about it, how big the opportunity is, and how fast it could be growing.
Sure. Look, I mean, Klarna is now at 111 million users, which is pretty amazing. We've been growing, and our main focus for the last decades have really been how do we reach as big of an audience, how do we get as many users as possible, and then more recently, we've been starting focus on how do we sell more services and increase the revenue per user, right? And so you look at us compared to some of our competitors, there are 1/3, Affirm is like I think 30 or 25 in total. We have Revolut in Europe that is 40, 50 million users. Klarna at 111 million users, but our revenue per customer is lower, and that's where the big opportunity is. That's why we're very, very happy to see, for example, we launched a card just 6 weeks ago here in the US. We now have 700,000 users, 5 million people on the waiting list. So we see a lot of opportunity on how we can bring more financial services once we have established that relationship with them and they use us for a buy now, pay later at Sephora or Macy's or Walmart or eBay or all the merchants that offer Klarna today.
Sebastian, for investors who are listening right now, why should they put money to work, Sebastian, in Klarna rather than your rival Affirm, which analysts are quick to point out, Sebastian? Affirm, they say it's growing faster and it's more profitable.
Well, I think that the truth is that, like, if first and foremost, I haven't sold a single share today. I'm a big believer in the company. I'm a big believer in the opportunity. Klarna is a very different business. Our focus has really been about growing in the pay in four space on the everyday transactions. You've seen us sign Uber, you've seen us sign DoorDash. Our experience is that the most critical thing is to build relationship with a lot of customers. We have more customers than Affirm here in the US as an example, and more globally. So first we build a relationship. We know this from Europe. We build that relationship. We become an everyday spending partner for the users. And then we can start upselling, whether that's fair financing, longer term financing loans like Affirm does, or whether it's other services like subscriptions and cards and other offerings that we're doing in Europe. And what we see then is that people really love those. If you look at some of our card users, our revenue per user there is 5 to 10x higher than the standard user. So that's a huge opportunity here. But our main focus has been growing number of users, and now we're coming into the monetization.
One question I hear asked, Sebastian, and I'm curious to learn more about this, and to make sure I'm understanding correctly, is that you all go to Pagaya to help underwrite long-term loans in the US. I'm curious why you do that, why you outsource that, Sebastian, because it's pointed out that Affirm, they don't do that. They actually own the underwriting IP.
Yeah, that's not entirely correct. So what happens is that Klarna is a bank. We're a fully regulated bank, different than Affirm. And we put most of our loans on our own balance sheet. We underwrite them ourselves. That's also a very big difference. And if you look at it, is that because of that, we recognize the provisioning of our loans directly, while the revenue comes over a longer period of time. Affirm is selling off about 50% of it to partners. Pagaya is a great partner, a small partner. A small proportion of our loans in the US are underwritten by them and given them, but the majority of all the loans are underwritten by ourselves. 97% of our loans are 0% interest bearing. And we have been doing underwriting for fair financing and for longer term tickets for 2 decades. So it's not entirely correct. We do most of it ourselves. Most is on our own balance sheet. But that also means that as we grow now quickly the fair financing product, as we grow, for example, one Walmart and start working with Walmart away from Affirm, this means that we will see a growing amount of those loans, and the revenue will come over the coming quarters because it's more profitable. Our funding with deposits is just much cheaper than selling it off wholesale like Affirm does.
So just so I understand, Sebastian, so when you're assessing the risks of making a loan to Josh, you're doing that. You're not outsourcing that.
Nope.
Got it. Let me ask you this. We talk a lot about AI on this show, Sebastian. I just want to get a better sense of how you're leveraging that for your business now and ahead.
Sure. I mean, there's been a lot of writings about that. We were very early to apply AI in our customer service that saved us about $40 million and increased our quality. I would say the most important thing, we took our average response time from 12 minutes down to 2 minutes, so customers were much happier as AI was much more responsive, faster. So that's been great. We've also had significant implications on our OPEX. We haven't been laying off people, but we haven't been recruiting for 2 years, pretty much, net. So we've been shrinking on average about 20% on an annual. We recruit a little bit, but we recruit much less than people leave, meaning that we've gone from 7,400 employees to just 3,000 currently, or taking the revenue per employee from 450K to over $1 million. And we expect that to continue. There's still tremendous opportunity to use AI to make us more efficient, but we don't want it to just be about efficiency. It's been a big focus of ours, but now what we're very, very, very keen and excited about is to take those learnings when we've been using AI as ourselves, as guinea pigs, as employees, to bring those services to consumers and merchants alike and see how we can create the next generation of retail banking services, the next generation of our app that is superior to what we have done historically as we integrate AI into that technology. So that's a huge opportunity and something we're very excited about.
Let me ask you a bigger picture question, Sebastian. Investors are betting the Fed's going to cut at this next meeting. That's good for Klarna, right? Lower funding costs. On the other hand, we are seeing signs here of a weaker labor market, and I'm curious what you think that could mean for Klarna, what that could mean for loan demand going forward.
So this is actually one of the reasons we've been focused so much on the short-term lending compared to like a firm that's doing slightly longer-term lending. The key thing for us is that the average duration on our balance sheet, people pay us back between 40 to 60 days, right? That means that when I've been with this company through a few recessions, when a recession comes, what you can do is you can change your underwriting, change the way you take decisions, and in just slightly more than a month, more than half of your balance sheet is underwritten by the new standards. This gives a company like us an immense flexibility and agility that normal banks don't have. A large bank, they're sitting with credit card loan portfolios. It may take them 3 years to heal and change, and make sure that the new underwriting models are, taking into consideration and heal the balance sheet. So it's very, very different, and that is actually a huge strength of the model that we apply. And we've seen that in Europe and now in the US as well. During COVID, during different opportunities, when we changed the underwriting model, you have a very immediate effect, which is very, very different than the traditional banks.
We're always looking for lines of sight on the American consumer, Sebastian. You have a line of sight there. What do you see in terms of spending and credit quality? How healthy, how resilient does the American consumer look?
Well, look, I think among our customers, we're actually seeing that they're spending, continue to spend. There isn't that much of any signs of a recession in their spending habits. I think it's also, our group is a very, is a group that really, what we call self-aware avoiders. These are customers that earn slightly a little bit more than low-income households. They're very conscious about their economy. They're not into credit cards. They think about it as the product of the devil, with with a lot of interest and revolving. They like this fact that it's a budgeting tool. They think about buy now, pay later as a budgeting tool. It's a fixed installment, 0% interest. And these people are also slightly more, thoughtful about their spending. But so far what we've seen is that they continue to spend.
Well, stablecoin issuer Figure Technology is going public on the NASDAQ today, set to trade under the ticker FIGR after raising more than $780 million. I want to toss it over to Yahoo Finance executive editor Brian Sozzi, who's with the Figure Technology's co-founder and executive chairman, Mike Cagney.
All right, thanks so much, Julie. Mike, good to see you. Congrats on this debut. Look, I think investors are very intrigued by your story. In the lead up to this debut, Mike, what did you hear from investors? Because I'm getting indications that this might open around $34. It priced above the range. Clearly, where investors were excited about something in your business model, or many things.
Yeah, I think Figure is using blockchain technology to transform capital markets, and we've proven to be very effective at doing that in the credit domain. Over $17 billion of originations on public blockchain, over $55 billion of transactions. And I think the market resonated to the product market fit with blockchain, but also the financials. Obviously doing $340 million in revenue and over $100 million in EBITDA last year, being GAAP profitable and growing at the pace at which we're growing. There was a lot of enthusiasm there. So we were excited about the market reaction and excited to get this IPO done.
In its simplest form, Mike, I think a lot of the average investors that are on Yahoo Finance, they will read the prospectus, they will slightly understand what you do and how you do it. But for those that don't get it, because it is a little bit of a complicated business, how should they think about the Figure model? What do you do?
Sure. The beauty of blockchain is it allows you to displace trust with truth, and that allows you to change how markets trade, how they're financed. So, if you think of something like the stock market as an easy example, 7 parties sit in between buyers and sellers of every transaction. Blockchain has the ability to distill that down just to 2. Every time we swipe a debit card, 5 parties sit in between the buyer and seller. Blockchain can distill that down to 2. So when you disintermediate those actors, you're freeing up trillions of dollars of market capitalization. And I think that's why the market's excited. But it's not just the disruption of existing businesses, it's the greenfield opportunity as well. Blockchain allows you to create new markets that didn't exist, very much like what we've done in private credit, where we've created a liquid private credit marketplace for both the trading and financing of assets in a market that didn't exist before and really could only be done with blockchain.
That is a large slug of money that you raised, Mike, almost $800 million. Where will some of that go? What technology are you going to put that money towards?
Sure, and look, I mean, in our last company, we did $1 billion raise from SoftBank, with the largest private company raise ever done, and we used that balance sheet as a weapon to be able to take risks that our competitors couldn't. I think that's perfectly analogous here. I think having that balance sheet is going to allow us to lean in and really push disruptive blockchain use cases in a way that not having that capital would be difficult.
Is this the perfect environment for stablecoins? Curious your take on how the regulatory environment has changed this year, even compared to when we talked a couple months ago.
Yeah, I think on a first order basis, obviously the Genius Act is hugely beneficial for the stablecoin industry. The second order effect of the stablecoin aspect, especially as money flows into treasuries out of bank deposits, introduces a tremendous opportunity for decentralized finance, which is really at its core what blockchain's for. And so, we're excited to be a leader in the DeFi side and really, leaning in and looking forward to how the market evolves over the next year.
I hope I got this right. Are you using OpenAI to approve mortgage loans? How does that work?
No, we use a lot of AI through our process, but we tend to underwrite in a very boring way. What we do is we don't use humans. And so by taking people out of the process, we have over 170 third parties that use our technology to originate assets on chain, and they all do it the exact same way. That homogeneity of those assets, coupled with the certainty of blockchains, allowed us to bring liquidity into that market where, again, it never existed.
What are you seeing in the housing market?
Look, I think obviously rates are beginning to come down. That's beneficial. That's great for all lenders, including ourselves. Reduces debt burden, reduces DTI considerations. But how far it goes, I'm not sure we're going to retest those lows of COVID. And so I think the folks that are in 2% mortgages are still going to hold on to those mortgages, and that's great for a home equity line of credit and second lien. But over 20% of our volume now is first lien mortgage, and we expect that to continue to expand, especially as rates fall.
Is it right to think you could be sitting on a very profitable year next year once rate cuts do start to flow in and the housing market hits some new gear that hasn't been in for a couple of years?
Yeah, look, I think there's certainly some macro catalysts out there, some tailwinds around the market, the interest rate environment. I also think what you'll see from us over the coming years is coming next 12 months is expanding the blockchain application into other asset classes. So just as we've been able to use it for private credit, we think it's equally applicable in equities and commodities and currencies. And so we look forward to leaning into those asset classes and driving new innovative use cases.
Is the stock market just outdated? Mike, I see what you're doing. It's fascinating technology, but I look at the New York Stock Exchange, even the NASDAQ. I mean, they're phenomenal companies, entities, but I see what you're doing, and I just think the whole game is about to change in a big way.
I think we're right on the cusp. I think if you looked at how much we accomplished over the last 4 years in a very, very difficult regulatory environment, and the environment that we now have with a different SEC and with an administration that's supportive of the technology, I think an enormous number of things are going to happen. It's sort of the proverbial slow and then all at once. And I think we're really at a tipping point. I think blockchain is going to be responsible for moving more public market cap than any technology has ever done before and probably ever will after.
I think about the business you created over at SoFi, Mike. Now you're out here with Figure. Clearly you have a passion for, I wouldn't say personal finance. Maybe I should. What has driven you to spend so much of your career and so much of your time in this industry?
Yeah, so I'm very passionate around connecting sources and uses of capital. If you go back to when we started SoFi, that was the thesis behind it. We take alumni to invest in loans from students from their schools and have an affinity bond and where both parties could improve versus the bank as a capital allocator. And with SoFi, we were a victim of our own success. The loans became so popular, we just relied on the wholesale capital markets to finance them. Figure gave me a second shot at this with blockchain and with DeFi. And so we're very excited about standing up a platform we have called Democratized Prime, where we connect sources and uses of capital and really disintermediating traditional capital allocators and letting individuals make their own lending decisions. And I think that ultimately is where the world's going to go to. I think with the stablecoin bill, the Genius Act, the second order consideration, again, is with all that money flowing into treasuries, it's coming at the expense of bank liabilities. That's going to force some kind of alternative way to look at credit. And I think decentralized finance is that way.
Well, congrats on your big day. Thanks for always making time for me and the Yahoo Finance team. Good luck for the rest of the day. I'm sure it's going to be very busy. Figure Executive Chair Mike Cagney. Appreciate it.
Thank you.
Well, it's been a big week for IPOs. Cryptocurrency firm Gemini is among them, going public on the NASDAQ today. It's set to trade under the ticker GEMI after raising $425 million in that offering. The stock's expected to start trading $28 a share is where they sold those shares. Joining me now, Marshall Beard, Chief Operating Officer at Gemini. Marshall, congrats. Thanks for being here.
Thank you so much for having me.
Well, as I just mentioned, it has been a busy week for IPOs, and in particular, sort of crypto and fintech IPOs have been seemingly the most popular and most visible this year. For people who are watching, who are interested in Gemini, and I know you guys made a big pitch to retail investors in particular, how is Gemini different than some of the offerings that are out there on the market?
Sure, yeah, I mean, Gemini, we launched over 10 years ago, and we've built this full stack crypto native platform that services both retail customers and institutional customers, anything from buying $100 worth of Bitcoin to a hedge fund that's trading, hundreds of millions of dollars of volume. So we've built a really great, incredible experience for all types of customers to enter their crypto journey.
And as you mentioned, you have a wide swath of customers, and you also offer a lot of different things, right? So you've got a stable coin, you've got crypto staking, you guys even have a credit card that offers rewards in crypto, you offer custodying. What is the revenue breakdown? I mean, talk to people about how you make money, right? And what the biggest sources of revenue across those different business lines are.
Sure. So you're right in that we offer a wide suite of products and services to our customers. We think of ourselves as a platform more so than an exchange and custodian, and we kind of see this future of like a super app as we move financial markets on chain, which is the ultimate goal of our business and our industry. And then so within our kind of product stack, we make the majority of our revenue still from transaction fees. These are folks that trade on our exchange. We offer a UX, like a brokerage, but we also offer the order book directly itself too. So we match buyers and sellers, and we earn transaction fees off that. Below that, our biggest product lines are our credit card, our custodian, and our staking business.
And I guess, again, going back to the first question then, if the biggest part of the business is that exchange business, the trading business, there's a lot of places to trade crypto right now. You got your Coinbases, you got your Robinhoods, there are a lot of choices. Why do people choose you guys rather than some of those other competitors?
Sure. We've been doing this for a long time. We've built incredible technology. We've built an incredible brand. We offer great depth and spreads and liquidity for people to buy and sell crypto really easy. We have an incredible UX. We take the complexity of crypto kind of out of the experience so that anyone can use it. And we'll continue to do that. Our plan is to bring as many people into the crypto ecosystem as possible.
You mentioned, we talked a little bit about that revenue breakdown, where you guys are getting the money. I'm also curious about profitability. You guys, not unusually for an IPO, although perhaps more unusually for a company that's been around, as you say, for 10 years, you guys don't make money yet, right? In the first 6 months of the year, I believe it was, you lost $282.5 million. What's that trajectory for profitability for you guys?
Sure. Look, we're focused on the future. We're in an incredible place right now. Our credit card product is seeing an inflection point of growth. So we look forward to kind of building on our existing suite, building our geographic expansion. We're expanding into Europe. We're expanding through Asia Pacific. And we'll continue to focus on growing our business lines and growing our customer base.
How tied are Gemini's fortunes to cryptocurrency prices? And what do you forecast for the likes of, say, let's just take Bitcoin as the example since it's the biggest one?
Sure. Our business isn't too tied to prices. I mean, we're an exchange, and so volatility is generally healthy for our marketplace and for our financials as well. So we like volatility. I think we generally like volatility up and to the right, and that's kind of our core business there. I don't have a price target. I think our founders, Cameron and Tyler, have penned a piece equating Bitcoin. And the 21 million Bitcoins to the above ground value of gold. And I think if you do that math nowadays with the value of gold, you're looking at $1 million of Bitcoin.
Yeah, there's definitely been some forecasts that have been out there. And gold itself has done quite well this year, we should point out as well. And, as I mentioned, you guys are definitely catering and courting a retail audience as investors in the company as well. What have you been hearing from them? Like, as you guys have been doing your roadshow and you're talking to retail investors, what has that interaction been like?
Yeah, people are excited. I don't think we're in this massive bull market right now, but the market sentiment is incredible. I think with the regulatory landscape, especially here in the United States, being very positive for the crypto industry, folks are excited. Folks are building projects again. They're launching new things. More people are coming into the industry. We're seeing incredible talent join places like Gemini, and people are just excited. We have the Genius bill that passed. We believe there's Clarity bill is coming soon. The SEC and CFTC are pro-crypto, and so it's just exciting. Everyone's excited, and we look forward, to see this through the rest of the year.
Marshall, thanks so much. Congrats again.
Thank you so much.
It's a big week for IPOs, and the coffee chain BlackRock Coffee Bar made its public debut on the NASDAQ. The ticker symbol BRCB. Now the shares opened around $26.50, and I'm joined now by the CEO, Mark Davis. Thanks so much for sitting down with me.
Thank you for having me very much.
So break down for me. You seem like you're an in-between a drive-through only model like Dutch Bros and the third place like a Starbucks. Break down, how exactly are you different from the competition?
So I think when you look at the model, we have all the components of a Dutch Brothers. If you think about the drive-through only, we have the order ahead with the app, and then we have third party that can order. But then secondarily, we have this lobby. And I think when you think about the magic behind our brand, it's certainly the baristas and the way that they engage, just terrific connection, really important.
Right now you have only 158 locations from the northern Pacific Northwest all the way to Texas, but you have aspirations to have about 1,000 by 2035. What's the roadmap to get there, and what are the challenges perhaps in the way of getting there?
So we're in 7 states currently, a lot of runway to grow within those states. We have planned at another state here in a couple of years, and you'll see one another couple of years after that. And I would say that the challenges are specifically making sure we have the right teams to engage the connection, the experience, all the above. We're about 5 quarters ahead with regards to our people pipeline, and really proud of the group that's gotten us here.
In terms of labor and building costs, how exactly has that cost the company? What exactly are you up against right now in this environment where tariffs are top of mind?
So I would say that with tariffs initially, Jeff and Dan, who were the original founders, they came up with a model where we buy beans from 8 different countries. And so when you think about that, we have the ability to regulate where we're going to buy beans to keep the prices even, keep the value proposition right. And as such, we've been able to be really consistent and keep that price for our guests. You add the experience to it, and it really makes it a fantastic place to visit.
Yeah, in your S1 filing, you say that you have imports from Brazil, Colombia, Ethiopia, Mexico. When you think about this sourcing, we did see the CPI print coffee prices jump about 20%. How do you then offset the cost of these higher cost tariffs, essentially from Brazil especially? Will you have to increase costs of a cup of coffee?
So we have not increased costs. When you think about Brazil, we have moved away from the Brazil beans for now, moved more to Mexico, and when that coffee price is at a medium level, essentially we were able to keep the prices consistent. The value proposition is so important to us. That's one of the strategies we really dive deep into.
And I thought it was so interesting because you also mentioned beyond just coffee, refrigerator units and espresso machines, we're also going to be impacted by the cost of tariffs. So when you think about essentially building out more locations, how does that then work? I mean, you obviously need to have those in your next location.
And so the espresso machines are pretty immaterial on cost. One of the things that we believe is having the baristas be able to pull the shots and make the drinks is so important. And so as we embed in within our model, that is part of it. And again, to drive that connection, that experience, really important to the brand.
And now on the flip side, what I've been covering so much, Yahoo Finance, is this impact of tariffs on the everyday consumer. Now you do have a bit more of an affluent consumer. I believe around 60% of your customers have an income of over 100,000. So describe to me, is your customer resilient right now? Or are they able to offset the impact of these tariffs?
So we, on average, on a medium price, are going to be certainly in line with the other coffee and beverage companies. When you think about how we are taking care of the guests, we're certainly doubling down on the experience. And I think with being able to keep those beans cost neutral, we feel we've got a great value proposition and have really reinforced that and driven that forward.
We did get a read from the University of Michigan this morning that consumer sentiment is down. Young people are very bearish on how they feel about the overall economy right now. How exactly do you convince someone to spend in this environment? And are you seeing any customers maybe spend a little less than usual?
Yeah, as our values and as the way we look at our brand, we go with connection, super important. I want you to feel the experience. Caffeine, we want to have a really high quality bean and we push on that hard, and then community. And so as we bring people in, I think we value it as this is their hard-earned dollars. I want to make sure that they feel it was valuable and worth it. And so as we teach our baristas, that experience and connection is really important.
Now, like Dutch Bros, you do have an energy drink as well, a fuel.
Yes, ma'am.
This fuel is very vibrant, very colorful, and another top of mind is the artificial coloring right now. It's top of mind for so many consumers. What's your plan? Does these drinks contain artificial coloring, and do you have plans to perhaps change that in the near future?
So our drinks do not have artificial coloring in it. And again, Daniel from the beginning pushed real hard on making sure that was the case. We try to make sure that the products are of the highest quality, and again, the experience is just so consistent, predictable, and causes you to feel that the value was worth it.
Yeah, I need to get the ingredients on those because they're such vibrant colors. Now, you do come from a background. You were Vice President of Operations at Panera Bread. You were also COO of the parent company of Einstein Bagels. How is this moment different for you than your past experiences?
I would say there's significant responsibility in making sure that the team is taken care of, that the guests are taken care of. And so, even today, when I look at everything that's going on, I'm most especially proud of how the team feels about it. And I think it gives them all both professional and personal career goals and aspirations. And as I move forward and we look at our company, everything about that is built around the fact that we want to make sure that we're doing right by not only our guests, but our team.
Yeah, certainly. Connection, caffeine, and community. I saw that in the S1 as well. Mark Davis, CEO of Black Rock Coffee Bar. Thanks so much for joining us.
Thank you for having me today.